Good afternoon, everybody. Good afternoon. So, this afternoon, afternoon for France, of course, a little earlier in the US. So, this is a new format for our webinar. This is for our institutional investors and analysts. And so I hope this format will be agreeable to you, and please give us feedback on it. So we're here this afternoon to comment on our annual results, refer to the universal registration document, which has already been published on our website in French, and that we're just finalizing for the English version, which will be published before the end of the week. For information, we've already had this exercise. We've already done this exercise yesterday with our private investors, around 40% of our capital accounted for there. And so I wanted, first of all, just a technical point here, first. You can ask us questions on our platform. If I could ask you to ask your questions on the questions section. The chat part is to exchange with other people who are on the conference. So if you could actually ask your questions on the question part so that we can take them live and answer those questions at the end of our presentation. So I'm going to start with our employees. Of course, that's a tradition with Thermador, and more particularly those of them who might have family in Ukraine. Some also have family in Russia. Of course, we have a thought for them today, because clearly those families are experiencing a terrible tragedy, and of course we're with them all the way. And especially the Ukrainians, of course, in this terrible time. We'll answer your questions later on concerning the impact that this conflict has on Thermador Groupe. So there are 712 people at Thermador Groupe at the end of 21, 44 new people during the year 2021. There's a lot more joined us than those that came, so there's a positive balance. So there's a growth in our headcount of 6.6%, but that rate of growth is much lower than our rate of growth in turnover, which partly explains the very high growth in our operating profit for the group. And as we've done for the last few years, we have to emphasize the commitment of our employees and the exceptional work that they've done, in particular over these last 2 years. Just a word about turnover per quarter for the last 5 years. You can very clearly see that the first 2 quarters of 2021 showed extraordinary and rather abnormal growth, over 30% in terms of organic growth. This is not normal in Thermador Groupe, and we're expecting in the years ahead to come back to more normal levels of growth, which correspond to the objective of doubling size every 10 years. If we calculate in the opposite direction, that means about 7% growth on average per year. So the annual turnover now has increased substantially, because it's now 486.5 million euros. We beat records every year, and these are remarkable figures. And this even more rapid growth in our net profit is quite surprising. Almost 53 million euros, that's a record. And Patricia will talk about that later on. And we'll see on the next slide on profitability, much more detail, of course, in the URD, in the Universal Registration Document. But here we see in this little table that the growth in turnover is 23%, that the trading margin is 0.2%. That means that we passed on most of the inflation onto our customers, as you saw in our letter to shareholders, number 105, and that we passed on average inflation of 4.1% to our customers, so that protected our margin, of course. But the difference between the operating profit and the relatively stability of costs, because of our costs have only increased by a small amount. And this has been helped also by the further decline in corporation tax in France. So that's helped our operating profit as well. So I'm going to hand over to Patricia to continue on this financial topic, and then she'll talk about some extra financial elements that I'm sure will be very exciting for you this afternoon. Thank you, Guillaume. So first of all, I want to talk about our real tax burden of 27.1%, which is going down to 25% in France, and we're already at 25% in Belgium and Spain. So let's just give you an idea in terms of the tax burden. So in the financial elements, I'm going to talk about cash flow. So we've got a lot of, obviously, high level of business. We saw that in our operating profit. And you see that our activity brought 60.1 million in cash, and they've been consumed in the following way. So firstly, the working capital requirement, high level of stocks, and we've used cash of around 51 million, and that's the result in our increase in stock levels. And I'll talk about that a bit later, in more detail. And then look at the key elements. Our cash flow is 28.5 million. Then use of this cash flow with investment in capex for 12.2 million. There's a major part of that is real estate. So we've built property facilities for our subsidiaries. Also, we've got the payment of dividends for 16.7 million. Then the repayment of loans for 13.2 million. And that's loans for the construction of our new buildings. These are fixed rate loans over 5 years, and we'll be finishing the repayment of those first loans in 2021. So we've got an overall use of cash of 14.9 million. So this is the high impact of the stock. On the next slide, I'm going to give you some information about changes to our working capital requirement, because that would impact on our cash flow, of course. So we've got customer receivables, which are in improvement, because they're down to 6 days. And we've improved it by 6 days, down to 56 days. So we've got a level of stock of 201 days of purchases consumed. So this is more than we had last year. Last year we communicated on the fact that our subsidiaries were going to increase their stock, and we note an amount or a value of stock on ships of 32 million. That's the FOB cost that we see on the second line. So we've got a lot of merchandise which is in transit. There's also the impact of rising purchase prices, high inflation from our suppliers, linked to the cost of raw materials, of course, and of course that has an impact on the value of our stock. And the key points we don't consider these levels of stock as being normal. We think they are non-normative stock levels in relation to what we think we need. We've got more than 6 months of stock. And with the elements, we maybe talk about that later, but the events surrounding Ukraine, Russia, etc., that might now help us, of course. These stock levels may help us. So in terms of supplier payables, we've got a high level of debt, which is again linked to the merchandise that on the boats, and that's the FOB cost. And we had a look at if there'd been any change in terms of our ability to respect the due dates on our supplier invoices. And we note that we've improved that level, and that we are respecting the supplier due dates. We have strong partnerships with our suppliers, and that's a good illustration of that, with the compliance with supplier due dates of 0.07%. So we've got financial structure indicators next. In terms of stock, 171.2 million. We talked about that. Impact on our cash, that's down. Positive cash situation of 27.4 million, but that's down compared to 30th of December 2020. And that's again to do with the stock. And then we've got loans and financial debt for 28.2 million. And that results from net debt, which is a little less than 29 million. Then shareholder equity after distribution of net profit. We've got a proposal for a dividend of €2 at the AGM of April the 4th. That will be voted at that time. But it's a healthy financial situation overall, as you can see. On the next slide, we're looking at two indicators in particular. So that's the ROCE, and the operating profit as a percentage of turnover. So if we look at these two indicators, the ROCE is up strongly, at 25.5%. And this has been improved, of course, by our operating profit, which is really high. And that has a positive effect on the ROCE. And the other indicator, the other ratio, is the operating profit as a proportion of turnover, and that's nearly 15%. That shows how we maintained our margins and how we are very profitable. And these are levels which we haven't seen since 2014 approximately. So that's just a point about financial profitability. And now we're going to move on to extra financial performance indicators. In 2021, we worked a lot on this aspect of our performance. So we worked on the indicators, and the important element is that we fixed objectives for the medium and long term. So you'll see that on the last two slides, we've got a medium-term objective, which is 2025, and a long-term objective for 2030. So for our sustainable development objectives, we've got 19 priorities that we fixed for ourselves. So they're divided up into 4 areas: human, and then governance. Third is environment, and the fourth, societal questions, so society. And Guillaume will talk to us about that a little later. There's no ranking of those 4 things. So, concerning human indicators, these are linked to our values, the values of the group, and we're going to find equal opportunities, quality of life at work, and we'll also see the idea of developing our talents. So in terms of equal opportunities, we've got key indicators. And there's professional indicators, which indicates it's a study which identifies whether the right salary is being paid for the right work. We've also got so for this indicator we're looking for 90 points. So we've got some work to do because we're at 88. In particular, we need to work on the place of women in the top highest earners of the company, because at the moment there's only one. So that's an indicator we need to work on. Then in terms of equal opportunities, there's also the question of women in executive positions. So at the moment we're at 39%. The objective is 40, so we're not too far off. In the other indicators, in terms of quality of life at work, we've got length of service. So we've got a high level, but we're working on that indicator through the quality of life at work survey. And that means we're listening to our employees. And we're a bit ahead on this indicator because we're at 9.68 and our objective is not to fall below 8 in terms of length of service. The other indicator is absence at work, including long-term sickness. And there we don't want to go below 4%. And at the moment we're at 3.4%. So we're ahead of the game on that one. The last indicator is number 8 there for employees trained. And in order to keep them with us and to help them develop and to match the needs of the company, we need to train them. And more than 70% of our employees were trained last year, and our objective is to get that score up to 95%. And now on to governance. Thermador Groupe has always scored very well in this area, but we've fixed objectives that will make us continue to work on that. So firstly, there's the attendance of our directors at board meetings, and that was 100% this year. Then we've got the attendance rate at our AGMs of our shareholders. Our objective is on the medium term of at least 68%. It's an important moment because the shareholders have their right of vote to use. And we've got our next one coming up on April the 4th, and you'll be able to vote electronically or in person for that event. So we encourage you to continue as you've done in previous years. So next point, number 3, is employee shareholding. The founder of the group always considered that it was important that employees have a share in the company through shares in the group. There's also been bonuses over the years, and these can be reprocessed into shares. There's also the company savings scheme, the PEE, and that started in 2001, and that allows the employee to invest an amount, and the company gives a top-up of the same amount or more, and that helps employee savings. Of course, that promotes employee savings. And the last indicator concerns the percentage of employees who have been trained in anti-corruption subjects. That's the SAPEN 2 law. And we want all our employees to be trained. So we started training again in person in 2021. And new recruits have to go through this training in order to comply with this SAPEN 2 law. And the next slide is our environmental objectives. I think that's what we've worked on most in 2021. we worked on scope 3, that's the point 13, that's point number 13, that's indirect emissions from our products and activities. So that's both from the products we deliver to our customers, but also the element of manufacturing, so that's from our suppliers. So we're working on that at the moment. And we've done that. We're working on it with 4 of our subsidiaries, and we need to continue working on that in order to be able to identify a target during this year, and then be able to, of course, put in place action plans. And this is something we'll be doing with our suppliers as well, of course. So if we go back up again, for direct emissions on scope 1, this is point number 10. That concerns our vehicle fleet. And the second point, 11, is heating and cooling in our buildings. So the idea with our vehicle fleet is to move towards either hybrid or electric vehicles. And we're working on that topic already, of course. And the other indicator concerns heating and cooling in the buildings. And that's gas, heating oil consumption. And there's a third element. I'll find it. It'll come back to me. And of course, the refrigerant liquid in the air conditioning systems. Because we know that even if we insulate our buildings well, we still continue to consume, and we can evolve and we can improve the energy efficiency of our buildings. So in the more indirect emissions, scope 2, we've got consumption of energy from our buildings. So that's electricity. So that concerns primarily lighting of our buildings and maintaining the temperature in our buildings. So we've already moved to LED lighting. We're not yet 100% on that. An idea is to use photovoltaic panels in a first building this year, maybe a second at the end of the year. So we'll continue on that path. And the last 2 indicators concern waste. So that's waste from our deliveries, so plastic, wood, etc. The idea is to reduce the share of packaging per product. So we've got action plans that we've started to implement, and they've started to give some results. And we're already in line with the objectives that we've fixed for 2025. So we continue to work with our suppliers so that our waste can be recovered, so recycled or reused. And the last indicator is about that waste recovery. So that's sorting. We do sorting already in our warehouses, and we've chosen 2 partners to work with us on that. And that's how we will manage to spread all these good practices throughout the group. So that's the environmental chapter. I'm going to pass over to Guillaume for the society aspect. So societal questions is mostly the relationship we have with our suppliers, and we try to characterize that relationship and to be able to see how we control that relationship. So it's going to be more and more difficult because there is the new regulation, the European regulation, which is called the duty of vigilance in Europe, and that means that we're going to apply that as well at Thermador. So in order to be able to demonstrate that our suppliers respect the environment and respect their employees, we need to be able to prove that we monitor them regularly. So we've got a number of indicators to follow them. The first one is the percentage of turnover that we generate from rated suppliers by the purchasing department. It's quite small at the moment. We're aiming to get beyond 80% with a homogeneous action right across all the subsidiaries. The second indicator is the percentage of turnover achieved with ISO 9001 or ISO 14001 suppliers. And we're going to be applying those same standards to ourselves. That's the third indicator. We're going to ask our subsidiaries too to comply with ISO 9001, 14001 standards, with an objective of above 90% by 2030. The last indicator is the percentage of turnover from suppliers who have signed our responsible purchasing charter, and we're in the process of submitting that to them. So either they sign our charter or they have an equivalent charter on the main topics. And there we have an objective again, which is above 80%. I'd just like to take this opportunity to welcome Califi, our biggest supplier. They have the kindness to grace us with their presence on the webinar this afternoon. I know that they're ready to work with us in 2022 on energy renovation, and I'll be talking to that. I'll be talking about that in the next slide. So prospects for 2022, there's what's of interest to you. I'd like to talk about Ukraine first, because we have assessed our direct turnover with Ukrainian and Russian customers, and that's worth about 500,000 euros out of our total turnover, 486.5 million. So it's not a great impact, just a little over 1%. But we are going to be impacted in different ways, like all European companies, and especially those working with foreign currencies, with their suppliers, as is the case with us. And so the variation in the euro-dollar rate is impossible to predict for the weeks ahead. There's also the inflationary pressures on metals, nickel, aluminium, copper, and these of course used substantially in our products and affect our prices. As I said earlier on, we were able to pass on 4.3% price rise to our customers last year, and it's probable that this inflation will continue in 2022 and will be at least 4%, maybe more. We'll have to make those calculations during the year to be able to give you those indications. And finally, there's the question of the Silk Road, which we've heard today is closing. So everything that goes by rail is going to be once again shipped on boats, and so that will contribute to this congestion in shipping traffic. And I think that the price of containers is not going to drop, and that crisis will have Ukrainian crisis will have an effect on transport, and of course energy. Of course, is going to be another issue to address. And yet, our executives are globally positive about the business, optimistic about the business for 2022. We're in a good dynamic, and Thermador Groupe executives imagine a good year in 2022 and imagine growth during the year. In construction, we're very involved in energy renovation, of course, in France, with the government aid, the MaPrimeRénov', but also the subsidies from the energy providers with the energy certificates. So this is going to continue. There's an enormous amount of construction of buildings in France to be refurbished. So a lot of our subsidiaries are involved in those sectors, and they meet the RE 2020 regulation, which is a new energy efficiency regulation. So their products are going to be boosted once again for a few months and maybe even a few years. So industry is again in positive shape in France and in Europe. And because our market shares are quite small, we've got good optimism, a good outlook there, good prospects there. Retail, so we'll be aiming for stability after 2 absolutely crazy years. And then finally export. We're hoping to return to a more normal business practice in 2022, because we're hoping to be able to visit our customers once again face to face, and that's fundamental, of course, to building up our relationships with them. However, in terms of profitability, we need to be very cautious, because we are going to increase our headcount, both in terms of salary costs, the level of salaries, and new employees, and that can have an impact in 2022, because of course salaries are a big part of our costs, and it's very probable that we're going to be caught up a little bit in 2022. In terms also of opportunities, we remain actively vigilant, monitoring companies that could join our group with similar business models and products that resemble our own, and if possible with a trend towards export sales, because that's something that we want to increase. Of course, it's only 16% of our turnover, a little over 18% in 2021. And I would say that this crisis, the pandemic, was great for the French market, but really negatively affected the export market. Okay, in terms of capital now, the institutional investors that you are represented here today, they account for 48.5% of our investors. A lot of new English investors have enjoyed us this year, and that's practically, between the Germans, the English, and the Americans, about a quarter of our capital. So the small caps have been able to attract, to draw in foreign investors, and it's all for that reason too that we are doing this in English too, so that our foreign investors, our American investors, can connect and listen to our presentation. Private shareholders still very much in evidence, with 40.9%. Within that number, you've got the founders of the group and retired employees, and 10.6%, which is held by managers, board members, and employees. So for those, we've got those who've got money in the FCP Thermador Group, that's the mutual fund, plus employee direct holding, plus retired holding, that's a little above 7%. So you've got an increase also in the number of shareholders. Air Liquide continues to be our model, and of course we're not at that level, but we do have, and we're pleased to see that our number of shareholders is increasing. Even though we're in a traditional business, the number of new shareholders joining us is very positive for the future. So in terms of liquidities, trading volumes, you've got that the figures over 4 years. You can see that after a record year in 2020 with record volumes of trading, we've got a 15% drop in 2021 at 1.9 million shares traded. And you'll see this distribution between the operators, more than 50% with Euronext. And in 20 and 21, we saw a lot of blocks being exchanged on alternative platforms. you're much more familiar with that world than I am. So the 3 analysts who work on the share and the teams from the company are involved in this webinar, representing a certain number of investors. We're followed by CIC, Banque Trompa, Audio, and these analyses are available on the website of Thermador Groupe on the finance page. It's always interesting to have the view of those 3 specialists on our share. I should be clear that Oda and Pozamba, we exert no pressure over those analysts, of course, and they will witness that. If we move on to the resolutions for 2022, these are going to be announced and voted at the physical AGM, and we're really hoping we'll be able to get back to the tradition of being together for the AGM, and that'll be in Lyon on April the 4th. And we'll also have a meeting with our shareholders in Paris on April the 7th. And of course, you'll be welcome to join us at Salon Hoche in Paris. So going back to physical meetings. So what about the news? What are the key themes for 2022? Well, we're looking first at the dividend. We're looking at an increase in the dividend from 1.82 to 2 euros. Obviously, it's less than the percentage increase in our operating profit, but what we're looking for is to never have to drop our dividend, so it's better to have it gradually rising than having ups yo-yoing from one year to the next. Then we've got candidates of 2 operational managers who will be replacing 2 other operational managers on the board. We like to offer the opportunity to our executives to experience the workings of the board of directors. So it'll be the turn of Philippe Bourris and Guillaume Chabaudet. He's the CEO of AELO, and they will be invited to join us on the board if you vote it. Also an opportunity for the shareholders to renew my mandate, because I've put up my candidature up for a further 4 years. A very important event is that we have 1 employee representative on the board who left Thermador Groupe in January, and so we have carried out elections to have 2 new candidates to sit on the monitoring committee of the mutual fund. And we've got 1 man and 1 woman who could be appointed to the board, and that if it were voted on by the AGM, that would be 2 seats on the board for employees, 5 independent independent directors, and so that's a great representation on our board for the employees. And finally, the earnings of our directors. You're very familiar with this principle, but this appears on page 40, 41, and 43 of the URD, which is presented in much more detail. How Patricia's earnings and my own earnings are calculated between the fixed and variable elements. And what we're planning to do, what we're proposing to do in 2022, is to ensure that the variable components of our earnings are judged according to those extra financial objectives. We've finished our presentation. Thank you to our interpreter Neil with his perfect English. Of course, he's English, and he's here to allow our foreign investors, whether they're English, American, or German, or Australian, to follow our webinar live in English. The slides we've shown you are not confidential. They're available on our website as of this evening in the finance section, as required by the Financial Markets Authority, the AMF, and they're available in French and in English. So we're going to proceed now with your questions. Patricia, do you have already a question? Of course, my computer has gone off, so I just have to boot up again. One of the questions I saw earlier was about the growth of the group over the next 5 years. So I would say that we have a 10-year vision. You'll say that I'm splitting hairs. No, I really think that 10 years for a company like ours is a good time scale because it allows us to absorb a crisis. And we used to say that's every 10 years. At the moment, it's a little closer together than that. So 10 years seems to be a good timescale to absorb all these different events, unexpected global events. Our objective in 10 years is to double size. We just want to protect our financial ratios, our profitability, and of course respect our extra financial objectives, and of course the principle of democracy within our company. So in order to you'll see these objectives on page 11 of the URD. And there's a question about the proportion of our supplies that have gone from rail to maritime. We've got very little comes by rail. Although we did try it in 2021, we tested it, but 95% of our supplies come by sea. So Ibrahim asked a question at the beginning. Exposure of Russia to Russia and the Ukrainian situation. There's obviously an indirect effect, and details about our energy needs. So we measured it, and you'll find that in the extra financial performance statement. I can't remember it off the top of my head, but our gas consumption and electricity consumptions, and sometimes heating oil, but it's primarily gas and electricity. But the question is as to whether there's going to be a change in cost. We have contracts for 2 to 3 years. So we've got a certain level of stability in terms of price, because we negotiated a price at the end of 2020. That's for electricity primarily, but also for gas. So we've got a group contract for those supplies, so that's protected. Question from Jean-Pierre, who's very familiar to us. You seem to be wanting to make a pause before you go to growth again. Not really. I just meant that we can't have growth like that every year. It's just not sustainable. It's clear that we also have to grow our teams in an organized manner, that we bring new people in, that we train them. And I think that will impose that break in growth upon us, I think. Are you thinking about international growth and thinking about a second centralized logistics site like in Saint-Quentin-Fallavier? No. The idea of moving into Africa or US, for example, that might be possible. But to deliver to Europe all the stock that are primarily here in Saint-Quentin-Fallavier is sufficient to to deliver to the whole of Europe. Because at the moment we haven't decided. We decided not to work with Russia. So Europe is within the reach of truck shipment. So 50 à la vie is sufficient. But looking like, if you look at Sodexo, they want to deliver industrial sites, could be interested in a similar business in a European on a European site, delivering directly to industry with a local site. That's a possibility. Not at all comparable to the stock that we have here in 50 à la vie.
Moi j'ai une question en fait de Matt Galverer qui dit can you talk about what margins look like the next several years, which cost will come back and which cost savings are permanent. Donc la question c'est de parler un peu de notre niveau de marge.
So he's talking about the level of margins of the last few years and what sort of charges will be going back again and what cost savings are actually more permanent. So what we saw in the distribution of our charges is that we've been able to stabilize our charges for transport. So we divide our costs up. The biggest charge, of course, the biggest expense is personnel, and that's wages. So 20 and 21, we saw the rate of salary charge drop. It was slightly higher in 21 because we used temps and overtime. The second biggest item is transport, and that's something we've been working on for 10 years, and we've been able to stabilize the cost as a percentage of turnover. So those are things, these are areas where we've been able to make savings and we've been able to control our costs. But in terms of cost savings that are permanent, I would say that it's really the way we are organized that allows us to stabilize the costs of our subsidiaries, because each subsidiary is autonomous, manages its own P&L statement. Of course, they look at their level of profit because the variables, their earnings are pegged to their performance. So they are permanently looking for savings themselves. And then that would be non-recurrent expenses. And it's through that we've been able to add some permanence to these savings. So we always have quotes raised. We negotiate every quote, and it's just organization. It's a question of organization. And that goes back to Xavier's question, who asks if you can give us your normative operational margin objective. Are we going back to pre-crisis levels or recurrent gains? My answer is that we have no objective in terms of normative margin. I don't give a margin objective to the CEOs of the company. We say to them, you are managers and responsible for these companies. You're responsible for your objectives. It's your strategy, it's your personnel, and you are responsible for your relationship with your customers. And you have the opportunity, the luck to be able to compare with other subsidiaries in the group. And then, of course, that means that each CEO of the subsidiary can compare his P&L with the expenses of the other subsidiaries of the group. There's one phenomenon which takes time, of course, and that's the interaction on the market. And you'll see that particularly on page 143 of the URD, and that's a page that the specialists adore. It's the sectorial part, sector-based part, and it's very variable from one subsidiary to another. Some have very high levels of profitability, and others where improvement could certainly be made. So they need to work on in the years ahead. It's the case of the companies that joined us more recently. Also the case of the project that we've had since 2018 between Dipra and Rousseau. We feel that through this coming together of those two companies, we'll get better profitability. And that's how we intend to proceed in the future to maintain, develop levels of profitability within the group. There's no fixed objective. The objective is to work as well as we can and do our best to get the highest levels of profitability. And you'll see in the history of the group that during periods when the markets were really high in demand, profitability increases. It's an economic logic, and you can verify that in the results of Thermador Groupe. When demand is high, any company who can deliver makes more profit, obviously. I would also add that in our study of our expenses is that everything we've been able to mutualize, we've been able to make economies of scale, because as a group we've been able to do that on the financial charges part, in the insurance field, also in transport costs as well. We want them to remain autonomous, but at the same time we can make economies of scale as a group, then we do that. Then the other items, of course, that are important are rents. And that's why we build higher, and we try to optimize as far as possible the space that we have, mostly in the warehouses, in order to be able to achieve growth in terms of turnover without our rents increasing mechanically by the same levels. And if we manage to keep our warehouses at a human size, then there's less need in terms of logistics and automation. So the work that we do, that we talked about this during the different meetings that we've had, the idea is to optimize our logistics. The project we're leading with FG Inox is important. We're trying to automate the preparation with one person, high level of productivity, and that will allow us to reduce the number of square meters that we occupy, so that we'll be able to optimize the stockage of products and reduce the number of people, and then we'll be able to develop FG Inox, grow their turnover without having to add at each stage new employees, more space, etc. And that meets our objective. And this helps us with the difficulty that we're finding these days of recruiting people into order preparation jobs, order picker jobs. And that's where the federating aspect of the group and the power of the group helps us. Another question from Xavier concerning direct and indirect exposure to energy prices. We say in our letter to shareholders number 105, we estimate that 30% of the group's growth in 2021 was directly due to the energy efficiency refurbishment plan. And you'll see that in our subsidiaries, and in particular in Thermador, the oldest of the group, and they had 55% growth in 2021, which is quite incredible for such an old subsidiary. From 49 to 76 million euros, it's quite incredible. and they are very much, it's because they're very much involved in those energy efficiency operations, so thermal systems and solid fuel boilers. We also are able, through Thermacome and PB Tube, they're suppliers of radiating and heating floors and ceilings, heating and cooling ceilings that can be used in houses which are properly insulated and properly ventilated. These are means of heating and cooling houses in an efficient way. Axelair, of course, have got their dual flow systems, which is recommended in certain refurbishments. So, of course, as you see, these are great performances in 2021, but real prospects for the years ahead. Question about swimming pools. That allows me to congratulate ALO once again, 55% growth. Of course, it benefited from the growth of the market, but we think that it has also gained market share. Since 2019, they report 118% growth, 19 million euros. So it's starting to be obviously important for Thermador, and you'll see that on page 143. Incredible profitability for such a young company, nearly 15%. So if you take the pre-tax result, they've gone over 15%. To answer your question, clearly there is a growing market for swimming pools, and clearly this recent arrival on the market is certainly capable of taking market share, and also with great storage capacity. Any other questions? I have no questions either in French. It's 16:58. I know that you are all very, very busy, and we try to respect our timing. So we're going to let you go. We're going to say goodbye. You know our respective email addresses. Of course, you can continue the dialogue with us after the webinar. I think there were 41 people on the webinar for this first video conference. And we look forward to your feedback. We'd be very interested to hear what you have to say about this experiment. And so we wish you a fine evening, and thank you for your loyalty and for joining us today. Goodbye to all, and see you soon.